Let's now see the provisions relating to the set off and carry forward of depreciation. Let's say you had plant and machinery of 100,000, or let's say plant and machinery depreciation of 100,000, and you are given that your profits and gains of business and profession before depreciation are 70,000. Your income from other sources is 20,000. The question which comes up is, how do you deal with the depreciation for current year? Well, the most obvious thing is that you have to reduce this depreciation from your profits and gains of business and profession. But what I am left here is, I'm left with a loss of 30,000. So how do I deal with this? Let's see. So depreciation can be either current year depreciation or it could be previous year depreciation. When I say previous year depreciation, what I mean is that any depreciation which has been brought forward from the earlier years. So my current year depreciation, the first thing I need to do is I need to reduce it from the income from profits and gains of business and profession. And that's precisely what I did in this particular thing. So what I did here was that I reduced this from my profits and gains of business and profession. But I was left with a loss of 30,000. Now what do I do with this? So the second thing is that the balance, if any, against income under any head for that previous year. If I go back, what I notice here is that after setting this off, I have income from other sources amounting to 20,000. So what I can do is I can reduce this 30,000 from this 20,000. So this is my unabsorbed depreciation. But what has happened? I am still left with 10,000 excess. Right? So what do I do with this? Balance, if any, to be carried forward. So for this number, which is my 10,000, I will carry it forward. Let's say this was previous year, 2010, 11. I will carry this forward to 2011, 2012. Okay? And this depreciation, which has been carried forward, will become previous year depreciation for 2011-12. Why? Because in 11-12 you will again have depreciation, right? Let's say what happens to this 10,000 when you carry it forward to the next year. Again, this 10,000 first has to be set off against income from profits and gains of business and profession. Balance, if any, against the income under any head for that previous year, which means that even for brought forward depreciation, for that 10,000 that you had brought, what you can do is you can set it off against any other income even in the second year. There is no bar. This is just a repetition, so you can ignore this. Unabsorbed depreciation can be carried forward for indefinite period, which means that this 10,000, if you were unable to set off, would have been allowed to be carried forward to you for n numbers of years. There is no restriction that you have to claim it for a particular period of time only. You can claim it for as many number of years as possible. And the next thing is claim of depreciation is mandatory whether or not the assessee claims it. Now it's not an option to you to claim a depreciation, it is mandatory for you to claim depreciation. What does this mean? This means that whether or not you debit it in your books of accounts, whether or not you reduce it from your taxable income, the assessing officer always has an option to reduce it, or rather he has the duty to reduce it from that.